It's high noon here on the West Coast, and I think still waiting for our guest, Mr. Paul Ablack, formerly CEO of On Approach, which was acquired by Trellance. So yeah, Paul is going to be our guest of honor today. And yeah, we're still waiting for him to show up, but I'm sure he will. He's a very punctual and professional person here, and yeah, it'll be great because he's just really, pardon the 90s term, but he's really on the cutting edge here of financial technology. And he's since started his own firm called Anasazi, Anasazi, and it's kind of like he's looking for opportunities in fintechs, investing in fintechs. So we're going to talk to him about all that. We're going to talk about commercial lending. He sees opportunities in new senior care facilities. He also has some other ideas about venture capital QSOs. Obviously, the COVID-19 triggering or causing big change in financial services. And then we'll definitely talk about his big time wheelhouse, data. So why is data more important now than ever? So yeah, so that's what's on the docket for our show today. And John Best, obviously the host of the show, is doing some other duties at, I believe, the CUNA Technology Council conference. Is that right, Elizabeth? Is that where he is, or Melissa, whomever?
He's doing the MC for the CUNA Tech Conference.
That's right. That's right. So yeah, he's doing that today, and I am your guest host, Mike Lawson, here with CU Broadcast. And yeah, again, just hanging out, waiting for Mr. Paul Ablack to appear, and we can mosey on with the show. But in the meantime, let's do a little paperwork here. We want to give out a special thanks to today's sponsors. Obviously, the number one up there is CUNA Councils. Thank you very much, CUNA Councils, for being a sponsor of the CU Digital Town Hall, and as well the folks at Member Pass. Who would have thunk that digital ID was just, the time is now for this? I mean, I've been watching these guys since day one, at CU Ledger, and I just was amazed at the technology that this has, and it's just so cool to see it really come into fruition right now. So thanks to the folks at Member Pass and their digital ID technology. Really, really cool stuff that they're doing, and the timing couldn't be better now for credit unions to implement this technology. And then, of course, Best Innovation Group, John Best, this is his baby, and I did email Paul. I did. Thank you, Melissa. So just waiting for a response from him. And anyway, yeah, this is John Best Innovation Group with the five voice program or product out there with voice banking and stuff. Again, talk about timing. The time is right for that type of product as well. And then CU Broadcast, that's me, Mike Lawson here, the host of CU Broadcast, the industry's video online talk show where we talk to innovators, success stories, game changers, all sorts of folks in the credit union industry, just all to make the industry that much better. So, and then I believe Mr. Paul Ablack is in the building. Is that right, Melissa?
Hey, Mike, how you doing?
Hey, there he is.
Been a while.
How's it going?
It's going great, thanks.
Good, good. Hey, we're just doing a little introduction, a little paperwork here, and was there anything else I need to cover, Melissa? Was that pretty much it? I got the sponsors. Thank you very much for all the sponsors. Thank you very much, John Best, for letting me guest host today, and our guest of honor, again, like I said, is in the house, Mr. Paul Ablack. How are you, sir? How's it going? Long time no see.
Yeah, it's like they say, it's been a minute. Yeah, it's going really good. I think it's like everybody else, just adjusting to the COVID lifestyle, and I think we kind of got that dialed in now.
Oh, yeah.
Yeah, it's just I think I feel like things are starting to pick back up. At least as best they can for now. But yeah. Yeah, it's just been a really interesting time. I found myself really educating myself on a lot of topics.
I bet.
Understanding what's been going on and so forth. So yeah.
Cool. Well, we're glad to have you come on the show, and thank you again for the short notice. And I'm just, I've been thinking about you a lot, and when we were working with On Approach, and they were acquired by Trellance, and now you're doing some really, I know you, Paul. You cannot rest on your laurels for like 2 seconds. So I know you're up to stuff here. And I just want to talk real quickly about, is it Anasazi? Is that how you pronounce it?
Anasazi Holdings, yes.
Okay,
yes.
give us a quick summary on what
Sure,
Anasazi Holdings is all about.
I guess a couple of things is I did a lot of research on the. I was looking for a different way to do business with credit unions. That was non-technology, and so I came across this the senior housing market. And thought about, okay, that's a market actually that's growing quite well, and more so in the high acuity space. I think COVID's having an impact on what they call the independent living. People moving into these communities, they don't want to move into communities, but for those who don't have a choice, they have to move in these facilities, and a lot of the facilities are old, and so there's development going on. There's not enough capacity, and so I looked at that market, and then I actually talked to some of my old clients like Topline, and asked them, are you guys doing any lending in this space? I think it's a really good credit unions to be involved with, and they weren't. They actually, Tom Smith, the CEO of Topline, was looking at trying to figure out how to get into the business.
Really?
And and so then he corralled a number of other credit unions, and they formed a group that's involved now in a couple of pretty sizable projects where they're getting an interest rate of about 4 to 5%. The underwriting cost is only a one time you got to underwrite it. It's not like, with car loans, I've got to underwrite how many car loans do I have to do to originate $8 million in business in one, with one loan. So we think it's a good model, and then we're working with another QSO who underwrites those loans. And so that they're trying to get this process figured out so that we can really, if other credit unions want to do this, we'll have a kind of a roadmap figured out for them. And so if other loan areas tighten up or they get unprofitable, this is an area, even though it's, there's a limited commercial loans, but it's a very profitable area for the credit union, but also serves the community because a lot of their, it could be their members that are going into these facilities, right? So, and then we're looking at other things like putting little kiosk branch for the credit union in the facilities.
Nice.
So that when people move in, they put their money, can all be on deposit there. The credit union's deposits go up, and then people can actually get their cash too from the kiosk right down in the facility. So those are the things that we have on the site on the roadmap.
A mini branch inside the facility. Nice. Well done.
Yeah. Because
I knew you were up to stuff. I knew you.
Yeah. And then so I've been doing that, and then also been working with Best Innovation Group, helping them. They've got a couple strategic technologies. One is around the voice banking, which I've always liked. I just feel like voice keeps getting better, and I would love to be able to do voice banking versus the way you interact with it now, especially if you're driving around. Being able to access and just do stuff, you're just that much more productive.
Yeah.
And so we're looking at that, trying to look for buyers for that, and then. The other one was their card switching. So if you have a credit card, it's a real pain to switch over to all the new, if you have recurring charges. So being able to call it set of credit, they can, easily move that automatically for you if you change credit cards. And then also it allows vendors like McDonald's, makes it really easy for you to, bring McDonald's in and have a number of vendors all like pre-loaded on your card. So that you can just walk in like, John likes Chick-fil-A, so he goes to Chick-fil-A, and it's all, there's no, there's nothing it's all preloaded as you walk in. So
very cool. Yeah, there was a number of items I wanted to talk to you about today, and it was all based on, because you did a recent podcast with the folks at CU 2.0, right? With McCartney. So I was kind of going over that. I went, oh wow, I had no idea. So I wanted to start out with commercial lending, because I think commercial lending is a little controversial right now, just based on what has happened with the pandemic and people working from home remotely. Will corporations, and in this case, credit unions, will they be all back in to their offices? I mean, what's going to happen with commercial lending, and where will credit unions kind of fit into that? I mean, what do you see in your crystal ball?
Yeah, in fact, that's when I did my analysis this summer. So if you imagine real estate, think of commercial real estate as a number of different products, right? So you can have commercial office facilities that people, like office buildings. Then there's industrial use facilities, there's storage facilities, there's senior care living, and there's different types of those facilities. So they're all products. I think commercial office space is Well, if you're in it, you've got no choice. You're stuck.
You're in it for a while. Yeah.
I think that market's going to get pummeled
Yeah.
for the foreseeable future.
Yeah.
I'm seeing it. I just ask people, like, are you getting used to working at home and so forth? And people are making adjustments. Like the law firms I deal with, they haven't been back since March in Minneapolis, and they're not planning to go back, and they have expensive real estate downtown.
Oh, I bet. Mm-hmm.
So I would say that market, yeah, not good. That's why I picked this product line in the commercial lending space, because everything I looked at, it's recession proof.
Right.
Right now, so if you think about commercial lending in the senior care facility space, the independent living that I mentioned earlier, I think that's become risky because of an existential threat called COVID.
Yeah.
But if you looked at the entire package of senior facilities, it's been a very good market to invest in. Mm-hmm. Commercial has done very well over the years, and a lot of REITs came up, but they just got slammed by COVID. So I don't see that. If credit unions were lending in that space, they probably are trying to unwind those deals right now, or they're probably dealing with the landlords that can't pay or do the debt servicing. Mm-hmm. Mm-hmm. So there's probably some workouts going on in there. But if they were in that business and they were counting on that in the future, they're going to have to replace that with a type of commercial product.
Right.
So overall, the commercial lending is not a bad thing. I just think there's sectors of commercial lending right now, which is the office space. And I think restaurant retail space too is I think the restaurant industry is going to come out looking different. Mm-hmm. But I'm not sure it's going to be as space intensive as it was before.
Yeah, you're right. Yeah, yeah.
Right. So
and the storage space,
in the mall.
The storage space. I mean, since there's no office space, where are you going to put all this office furniture? Well, put it in the storage space.
Oh yeah. Sorry. Yes.
I'm just having fun with you there, yeah. But where are you going to put all that furniture? So yeah, it's interesting that you kind of divvy it up into these different areas or different products, like you put it. And so, yeah, one's going to be over the other for sure. And the senior care centers, baby boomers, the biggest generation ever besides what, Gen Y? Gen Y. So it's going to go nothing but up for the next, decade or so?
Well, it's about 11 million people, right, will be eligible for those facilities over the next 10 to 12 years. Mm-hmm. And right now, the usable capacity is estimated around 3 million units, okay? And a lot of that capacity was built in the 70s.
So it's time for something new.
Right, and you've also got the shift towards community-sized facilities. So instead of one big facility, mm-hmm. you're seeing, like, especially in the high acuity care space, maybe your parents don't want to leave the neighborhood. So there's a 40 unit that exists, which allows them to at least have that familiarity of where they lived before, and the family, making it easy for them to visit. Yeah. So there's this whole new product concept coming up, which brings down the barrier of entries for lenders, smaller lenders like credit unions, right? Because you're not talking about a $100 million facility. You're talking about an $8 million facility.
Right.
Right. So now it creates opportunities for lenders.
Nice. And so what should credit unions be doing, right? Should they just obviously be doing their homework, doing their research? And
I think it's actually best. I'm trying to identify QSOs. Like, I had thought about a QSO doing this. I think for sure the underwriting has to be done by a QSO. I think if a credit union could not handle this, the level of underwriting needs to happen with commercial loans in general. And so having a QSO do that, we're using Servion right now. They're here based in the Twin Cities. And they've offered to say, we want to learn this process so that we can knock these things out much faster. So I think from that perspective, the credit unions now have an underwriting partner, which is a QSO that can help them. So really, it's a matter of them just deciding if this is a good fit for them going on, because they don't have to have staff to do this. They don't need to be researching it. I think we're trying to set up things in the industry that will be there that they can access.
Right.
And we're just doing this on a state level right now, just in the state of Minnesota, but it's something that Servion, I'm sure, would love to expand and make that a national capability, because they're owned by a lot of credit unions themselves, and those credit unions, they would love to see that QSO continue to grow.
Mm-hmm. So it sounds like the time is ripe here, because like you said, the housing right now, or the facilities, are antiquated. They're all built in the 70s, probably early 80s. So they're kind of not, they're not up to par with what's going on right now, especially with the pandemic. So that leads to new developments with new technology and new requirements to handle, pandemic type situation. Right. So the building is there, the development is there. So it's just getting the lender to come on in there and get the ball rolling. As
the lender,
well, right?
And then the nice thing, and the nice thing too is that when the customers move into the facility, they typically put 2 years of deposit ahead at the time they move in. So that actually helps the credit unions on the deposit side too. So we can create a relationship where they come in and they put their money on deposit right away. The credit union's deposit level goes up and so it's a really good way for them to access deposits.
No doubt. All right, credit unions, those out there are listening. If you want to get creative, here's an opportunity for you. So
it's just it's a low risk. It's a lot lower risk, and it's a much better margin than the traditional loan. So.
Sounds good. The other thing that I wanted to talk to you about was your idea of a venture capital QSO, and you kind of touched on it here, a venture capital QSO that manages fintech investments. So this really piqued my interest. So what's the background?
Yeah, so I just in the time that I've spent in the credit union industry, so probably started kicking around since 2010. I've just come across so many credit unions that they see a vendor, they like the vendor's product, and then the vendor says, well, you know what? And I did it myself. I mean, I went to my clients and I said, do you guys want to invest? And I think, I had a good fortune of, I had some good board members that use our product, and they were also good, business savvy. We had CFOs on our board, providing a lot of good financial guidance. I think that what I see outside though is a lot of credit unions involved with companies, and software is complex, right? It can be very risky. Product development is a real challenge. So what happens is the vendors gets the first round of funding from the credit unions, that runs out, and then they need more money, and they go back, and the credit union's not used to, well, wait a minute, I just gave you money, a year ago. Why do you need more money now? And then they get into this sort of, it gets to be a bit antagonistic because it's not just once. These things require sometimes multiple rounds.
Right.
If you understood all that going in, you would be able to do better negotiations up front with those companies. Set realistic expectations, and then it's not your first time. So there's a lot of credit unions that have it's their first time doing this, and they've got their regular jobs as well. So it's like they're doing their regular credit union job, and then they're doing this on the side, which is interfacing with this company. So if you were to take all of that inefficiency and then bring it to a group that the credit unions invested in that fund, and then that fund had a key management team that went out just like in a private equity fund and made selections, right? They said, yep, we're going to do this, and we're not doing that. And we're going to divest of this, right? So to get it started, you could go around the credit unions and say, okay, how much you guys got sunk in that? Here's the arrangement. You put an X to this fund, we'll take over the management of that, and we'll decide whether to divest of it or, restructure it in some way. But now we're the PE firm that's doing all of that on behalf of everyone.
So they're the conduit, basically.
Correct.
Right. Okay.
And then Nick, I think I had mentioned on the podcast that Nick Evans had started this concept by, like everybody does their own. We did it. I think the QSO does it. We all do these sort of rounds, of interviewing companies and inviting them to things. To me, it would be more efficient just to do one round. And then the best stuff could go around and visit those conferences if you want to do that. But have some kind of, standard place where everybody goes through, right? You got to go through this, you clear that gate, then you can come into the industry and you can be at different shows, et cetera. It doesn't matter to us, but we kind of vetted that actually is a decent technology. Wow. And so, what you would avoid is, I don't know how many similar vendors, like you go around the country to shows, and, there's, internet, I think of mobile banking vendors. How many vendors have a partial investment from this credit union and that credit union? And so there's an efficiency in that. And so that's what this PE fund, this private venture fund would actually resolve for the entire industry.
could they bring more than one venture capital QSO, or would you want just
I
one
honestly think the
or-
industry just support one. Just do one, because
Right.
then you get competition. You get two of them, start playing against each other. Just like if you total all the assets of the credit union industry, you're probably looking at a good sized bank, not the largest bank, but a good sized national bank.
Sure.
They wouldn't have two different venture groups, right? They'd have one venture group that does it for the entire bank. And so I would take that approach, and make sure you hire the right people for that. You need people to understand software. You need a good finance person, somebody who understands investment, how to structure investment deals and so forth. And you put that team together, and then they're the ones that are corralling the technology. And to me, that would bring the best technology to the industry.
Agreed. And it sounds like it would be a more streamlined process too.
Yep.
Instead of something happening over here, something happening over here, something happening over here. It would all just kind of be funneled through this one QSO, right?
Correct. And it doesn't mean that you would only pick one company for each sector. So let's say you could have 3 online banking vendors because you want to maintain competition, right? So you need to make sure there's interest. So the PE firm may decide, okay, we're going to have 3 of them. We're going to make 3 of them in, and we'll make the top 3, and then that's those who, and then we make sure that pricing is fair and support is good, et cetera.
So from the credit union perspective, what's in it for them? Obviously the investment and then the ROI coming out of it, or what's
So they may, like, these firms they make money from the credit unions, right? And the sales, the equity fund gets a share of the profits, right, from those sales.
Sure.
And those sales could be distributed back as dividends to the members, to the investors.
Okay. Wow.
Plus, and when there's an exit, right, there's an exit that it makes sense to do, but and the funds will all get distributed. So all the gains from the exit, so if they do a liquidation like we did, that those funds would all get distributed back to the members. And then also by virtue of the fact that you got the PE fund there, you would also decide, does it make sense to sell that right now, or is there another way to structure that deal so that there's a lot of valuable intellectual property, maybe we do a licensing deal back. Those kind of conversations happen before the actual sale event happens, so that clients aren't left hanging, right? Because that's a lot of complaints you would get, is people say, well, they were great until they got sold, or they got sold, they got acquired by let's say a large banking vendor, and now we're not big enough to get attention from them.
Okay, gotcha. Have you approached the folks at NetQSO? Would they be kind of a resource for something like? Because I'm surprised this hasn't happened already. I mean,
I know.
That's the thing about good ideas. You're like,
yeah, and it
hasn't happened.
It wasn't my idea originally. A guy that Austin Wentzlaff, who worked for us, he was the one that came up with the idea.
Oh, really?
And I thought, wow, that's a really good idea. And so I got to give him credit for it. He was the originator of the idea.
Okay.
We were just surprised, like, why hasn't this happened? I think there's been sort of like people dipping their toe in the water, with MDC, and then there's some informal group, and I think we'll have credit unions in the Southeast, but nobody's really done this on a bigger scale, and I think that's the opportunity.
I think there's so many, because when you go to, like, let's just use NetQSO as an example, you go to their conference and you walk through kind of like the vendor area where there's such a kind of an entrepreneurial startup atmosphere there. And it's like, why? It gives me goosebumps thinking about it, because there's so much potential in that room. And then they do the next big idea thing, which is kind of a Shark Tank type thing. It just seems like a natural progression for what's going on right now.
Now that you say that, Mike, that NetQSO could be that PE fund.
Yeah, you're right.
Right. So you want to get into the industry, and you got to go through NetQSO.
Right.
And they're the ones that manage the whole process, and so but right now NetQSO is just it's an association that has a very informal relationship. This would be more formal, where those vendors you see there have all been vetted, and the ones that are in there that need money, or have a relationship through distributions from NetQSO, so they're actually acting as the investor in those. So yeah, I would agree with you. I think that is a natural place for that.
Paul, you need to call Jack Antonini like right now.
Yeah, yeah. Actually, I'm going to reach out to Brian and
And mine too. Yeah. Why not? Well, their next big idea is happening here in the next couple of weeks. So
yes,
the
I
timing
saw
is really
that.
right
Yeah.
for this type of thing. Well, I saw that kind of in the show notes of the podcast there. I went and just really piqued my interest. Like, isn't there something out there like that already? Because there's so many QSOs popping up left and right out there right now. So it just seems like, again, a natural progression for this part of the industry.
And Mike, as credit unions look to streamline right now, with COVID and so forth, to me, that's an area for them to look at to say, why are we doing this?
Completely.
Why don't we flip this over to this PE firm, let them do it for the industry, right? Get us, because everything takes time and energy, to do. And so those are the types of things that don't really fit in the core business of the credit union.
Right.
But still, they're valuable to the industry. Right. So that's where I see that that's where the inefficiency to me is an opportunity today to clean that up.
Indeed. Oh, good stuff, sir. Good stuff, sir. The other thing I wanted to touch on, and you obviously you are out there all over the place researching and doing all sorts of really cool things. COVID-19 causing big change in financial service. What have you seen out there besides everybody going all in on digital? I mean, that was kind of, that was a have to. It's not a luxury anymore. So what else have you seen out there that COVID-19 has really kind of caused change, and then what credit unions can do to run with that?
Yeah, I've been kind of following the numbers from that come out from PSCU.
Oh yeah, every week they have something.
So if I think about, COVID-19 is the existential event that happens to all of us. And then what does that mean for credit unions? Yes, more digital, but I also think the things like auto loans, what's that going to look like? We went from a lot of driving, a lot of people using cars to commute to work, to now not using cars. I don't see that market really is that going to be as strong as it has been in the past. The market for new autos. I mean, if you're driving less, your car's going to last longer.
Right.
So that what was something that people could count on, I think right now is suffering. And I just saw the latest numbers. There, the market's like down 6%. I thought it would have been down more from February, but that may continue to decline down. So what do you replace that business with at the credit union is my question.
Yeah.
Right. Home remodeling is picking up and probably will pick up. So I know the mortgage business has been good because of the refis and the rates and so forth, but how are you getting into that home remodeling business? What different things, how can you structure your offerings differently to make sure you're ahead of that? Because people aren't walking in, they aren't transacting with you on a daily basis. You're not hearing about things. So how do you make that really seamless for them to, hey, I want to remodel my home. The first thing I'm going to do is get a line of credit, or I'm going to get an extension of line of credit to get that project done.
Right.
So I think that is an area, and of course the space, the utilization of space, which is a big cost for credit unions. I talked recently, part of a smaller group with Kirk Drake and with credit unions, and I think they're really going through and asking, what space do we actually need? Right.
Evaluation here,
Yes. And then another interesting one that came up was, but maybe for the call center, we do need that space, because one credit union is experiencing the fact that people now are remote. The quality of the call center support has dropped.
True.
And that's from them listening and just on calls, which makes sense because the workers now are home and they're in an environment where it's stressful. They've got kids at home using Zoom. They're trying to get their stuff done. You got another spouse maybe in the house also working. So they're not in that place, and then they're trying to listen to people's problems or struggles on, as they call into stuff they want to get done, and they're finding missed product opportunities. So where they could have recommended something is not getting recommended now. So I think that's another area where you've got to change the way you look at it, and maybe there is that call center piece that has to stay together.
So they would reallocate that office space that's really not going to be used anymore for a call center or a makeshift call center, right? Is that what you're saying?
Yeah, I heard it the other day. I was like, I didn't even think about that.
Yeah, that's
And
a good move.
it completely made sense when they, it was described, right? Because you don't have that supervision anymore that you may have had in the call center, or the proximity to others, listening to them and how they're handling the calls. Maybe there's a way for you to do better. All that's gone. You're sitting alone in a place doing.
I know. I can't imagine doing that all day long.
Yeah.
I mean, I applaud the people that are in call centers in any industry but are just at home trying to get that job done. Oh my gosh. That's like heroic work right there by itself, just handling the frustrated consumer. So it's just, wow. Yeah, that's a great idea to kind of reallocate that space to keep them all, I guess, keep that together so they can kind of feed off each other and help each other and support each other. So good move. I also wanted to talk about data, because this is like your big time wheelhouse right now. Is like most of the interviews that I've been through, especially when COVID hit, it was like data is now more important than ever. Oh my gosh. It's to really know what, in this case, what the credit union member is doing, what they need, what their future needs are going to be. How do you see this playing out? What's data's role right now in credit unions? Because this is incredibly important moving forward, especially as we kind of restart things here this fall.
Yeah, and one thing, everybody's talking about AI and predictability, right? So being able to use data to make predictions on what's going to happen, and things like product offerings, et cetera. That's what Facebook, does so well, and Instagram. And I believe that I'm watching the rate at which that predictive technology is moving forward, and so I've seen some technologies now from a predictive analytics perspective that are just mind-blowing. The number of models that they can create and the types of models that can all be created off a data set, and then being able to choose the accuracy of those models, it's sort of a self-learning system. That's where this is all going, which makes it the AI even more powerful than I think it's originally started out to be. Mm-hmm. Feeding that, you've got to have a lot of data. And my hope, and dream one day is that the credit union have one large data pool. The only large data pool in the credit union industry, I've said this for years, is NCUA, but you can't do anything with that data because it's so highly summarized.
Yeah, you're right. Yeah.
Right, and so and I think that's something that I think Trellance has got in their roadmap, is that data lake, because the challenge for the credit union industry has always been to try and normalize the data, because you have so many different systems. You need a place to clean the data and put it all into one spot, right? Mm-hmm. Mm-hmm. Whereas like right now, Facebook has all that. The data is so clean in terms of web clicks, it's very standardized between Google and Facebook. They all use the same data. They don't have that issue. So getting that large pool of normalized data is step one. And then putting this really advanced AI on top of it, that's the easy part once you've got that pool of data. Mm-hmm. And I would like to, see credit unions be able to look and see how many payments were done across the entire country yesterday, and what was the card type that was used. Because right now, if you look at PSCU, they work on a subset of data.
I was just thinking that.
Yeah. They've got it, but it's not for the industry. And then they can't also tell you how many mortgages were originated yesterday in the industry. They can't tell you what the age of the borrower was for those mortgages, what the average house price was of those, for those mortgages. There's all of these things around these different products, all these data points that if you had all of them in one spot, it would be incredibly powerful.
Yeah.
And I don't even think there's a bank that has that is even that nimble in terms of their ability to access that granularity of data. So I think that has to happen. Think about that as the foundation, as this big pool, this big data lake.
Yeah.
And then bringing the AI on top of it. And that data lake would be the gift that keeps on giving, because AI technology is only going to keep improving.
Of course.
That's right. So, but it's only as good as the data you feed it.
Right.
You got to give it high quality data. And right now, I think, the credit unions are just the focus is too much on themselves. I need to get my own data, and I don't want to share it. That's not how you survive in the longer term. you need that data, and then you need to bring in other data sources that you don't have as an industry. Bring that data in and start correlating that with your own information for the own industry information. That's where this whole thing starts to just, take on a new life. And, and get out of just the traditional ways of doing things. Like I get a report on my desk and now I've got, that's the analytics that I need. That's not what we're talking about here.
Right. And so how would that benefit like a regional credit union, like in New York, as opposed to a credit union in San Diego? So they would take that central data and just kind of break it down according to their region, or?
Yeah, exactly. Like you put filters that allow them, all the data is de-identified. So you can't identify a member, you can't, you wouldn't be able to target a credit union, but you could pick regions, right, of data and do the analysis there at a level. And, and I think there has to be trust among the credit unions that you're not doing this to try and hurt each other.
Right.
You're doing this to lift your own area and lift the industry. And so it requires some, look, I think the Insurance Institute is a great example. All the insurance companies send their data to the Institute for analysis on accidents. And that's why when you get a speeding ticket or an accident, every insurance company knows about it because they've all sent their data, but they don't use that data to attack each other.
Right.
I always got a lot of pushback in talking about this from credit unions. Well, that's my data. I don't want anybody else seeing it. And to me, that's very short-sighted, right? You can absolutely de-identify the data. So the person doesn't really matter. The name of the person doesn't matter. What you're looking for is what is the behaviors of that cohort, right? What does that look like? And so I do think it's part of it is getting your head around it as an industry. Stop being so myopic. Stop trying to do this all on your own. And really think about it as a collaborative data pool for the industry. And then really start to, accelerate, because look at COVID. COVID is driving the need for credit unions to rethink what products are we offering.
Oh, completely.
If auto loans are down, right? What's that mean? Mortgage rates are so low right now that, we are very, the margins are very low. What are we replacing that with? Because at the end of the day, our business is to take deposits and lend money and provide services. Well, the services are great, but they don't make up a huge amount of money. A lot of it comes off of the interest. Well, to get interest, you have to have loans, right? If you're sitting on deposit money and paying people for those deposit rates, you're not going to last very long.
Right.
So this COVID to me is, for the industry, is a wake-up call about innovation, and innovation in this business needs data. And so the sooner that could happen, I think, which is just, if you think about it, I've talked about two things. One is this PE thing. It's about consolidating, working together, bringing those resources and really going to town with it. I think that's something that needs to happen.
And that's what credit unions brag about, is their collaboration, how they share this information almost freely to help each other out. So again, just kind of like the venture capital QSO you're talking about, I just think something like this is a natural progression for credit unions, especially when something like the pandemic hits, when we need this type of information to better serve the members who are desperately in need of help.
Yes.
Whether it's, delinquencies are going to be on the rise, and, collections is going to be just going off the charts here pretty soon. So a lot of this data is going to be super, super important to them. So the $64,000 question, Paul, is how is it possible for this to happen? And B, or the next part of it, how can it happen? What are steps to move forward? Is this kind of an NCUA type of thing, or
no? I think
just kind of get together on their own and do it.
No, I think Trellance has the infrastructure to do this, right?
Oh, wow.
And I think they have this. I've at least I've talked to a couple of the former employees, and they're saying that this is something that they're planning on doing. I think that message has got to get out, that you need a standard data platform for the industry. And they're the furthest along of anybody that's ever done this. I mean, I think you should probably get Tom on here or his product person to talk about that, right? But I do think that's where the future is. And this industry needs it now more than ever.
No doubt.
And the investment queue, so that's not a hard thing to do. You know what I mean? And the CUSO could be that one that goes out there and says, hey guys, everybody that's invested in technology companies right now, and you're frustrated with or it's challenging for you, we need to talk, right? Let's start having some calls and talk about consolidating all of this, right? That's something that's very doable.
So it sounds like the theme of this conversation is consolidation.
Yes.
Consolidation and collaboration, which is what I've been hearing all along.
I got to tell you one thing though, like I talked about the credit union data, and how rich that is, that data set. So with the senior business, we started a senior website, very similar to what we did with On Approach, to try and pull people in and so forth. Well, we then started looking at Facebook, because we could actually go into zip codes and target those zip codes using Facebook. And it is shocking, Mike, how much data you get from Facebook.
I bet.
And that's just from pictures and messages and likes and so forth. Absolutely astounding. I can target you on Facebook. I can send you ads directly on Facebook, right? Because you fit my profile.
Down to the individual.
And we pay, I won't know your name, but I know everything you do. I know what time you click. I know what articles you clicked on. I know how long you spent the time on those articles. I know what you like, what you didn't like. And now I'm coming into you on a string. And that to me I had a sense of it, but I didn't realize how much there was.
Mm-hmm.
And so think about that now. And let's say you have this data lake, you could go append that Facebook data to the data lake.
I bet. Oh yeah.
Okay. So somebody's hitting Zillow. You're seeing those Zillow hits.
Mm-hmm.
All right. You could see the addresses of what houses they're looked at on Zillow. You can already start sending in a pre-appraisal, pre-approval, right? And you know the credit score of the individual because they're a member.
Yeah.
So it starts to get, I understand why Facebook is making so much money.
They have all the information.
They have it. They are a marketer's absolute dream. They are. And so is Instagram, right? And so now that's a scale that we have to be thinking about, right? It's not just about, I need a data warehouse. That's circa 1990. We have got to be thinking large scale data and different types of it and being able to access it. So
yeah. So should credit unions start combing through Facebook and Instagram and things like that for marketing to their members? I think
you could. Everybody does that, right? They could do that on an individual basis.
Sure.
If you had much more data, larger scale data that you could work on, and then bring the Facebook data and append it, I just think it takes it. It's kind of like you decide to go for do you want to go for a quick jog or do you want to run a marathon, right? You know what I mean? It's like it is the same, but two different scales, two different outcomes, right? So and so that's the thing you don't want to miss. You don't want to be asleep at the wheel and realize, man, somebody comes in and they're eating our lunch. Some new bank comes up and they're just eating our lunch because they figured out how to do it and we couldn't get together as an industry and figure that out.
And now's the time.
Code yet.
What's that?
Nobody's cracked the code on it. I haven't seen any around where anybody's really cracked the code on bringing all this financial data together as cleanly as we're talking about.
Well, now's the time to do it as we're kind of in this situation now. Yep. I mean, we're going to be in it for a little while, I think. So now's the time to really, because I've heard people talk about, now's the time to kind of treat your credit union or any organization for that matter as a startup. As we restart to really reevaluate what's working, what's not working, as what you've been doing for 10 years now, is that really efficient? Is that really effective? Right. Are you using the information effectively? Are you not tapping into other resources to get that data that you're talking about? Or now's the time to really do this type of stuff. And I think it's ripe for
they have to they got to be like Madonna. Madonna, people,
she reinvented herself.
She kept reinventing herself over, and that's what you just have to do that. I think restaurants right now have got to reinvent themselves, right? Credit unions are in the same boat. Don't just, kind of try and squeeze down and squeeze through and do what you did before. Rethink what you're doing. Yeah. What business are we in? What products do we provide? What service? How do we engage? You know, those are all great strategic questions.
Yeah. The other thing I wanted to talk about, I'm not sure how deeply you can get into this though, but the data transformation that credit unions were on prior to COVID, and all of a sudden then COVID hit, then all of a sudden everyone had to hit the accelerator and do this super fast. But I've actually read, I think there was a story on the Financial Brand today or yesterday about a lot of these transformations, or the accelerated transformations, have not been very successful. So do you have any insight on that, or what credit unions can do to really avoid kind of a, I don't want to say a disaster, but, you know, just to avoid, you know, kind of a failure in this area, because it's so important for credit unions right now. I know this question is from total left field, but I just.
Oh, I don't know what the answer is, Mike. I see the problem, you know, and it's, and sometimes, you know, it's kind of like, it has a little bit of that feel of, remember what the year 2000? Remember all
Y2K.
that? Y2K.
Yes.
It feels like that, and that's a lot of bad decisions. Unfortunately, get made under that pressure.
Right.
You know, to me, it would be you just take a breath here and step back and sort of. I think you got to ask some of the bigger questions, like where are we headed before we start running and doing a big transformation.
Yeah.
Right. What is that? What is that thing we're trying to get to? And then will this get us along that path?
Yeah.
You know? And to me, one of the best things I learned in software in my career was the agile development method, which is, it's commonly used, right? Just basically, you know, to start with something small and iterate it, as opposed to doing this massive project. There's very few massive projects like that have been very successful. That I've ever heard about, you know, you always like in the ERP days, everybody was putting in these big systems, but they would take years and never get done properly. Yep. And an agile method in these types of times with a vision, to me, is the way I would tackle this thing.
Yeah. Yeah.
Right? You
What's the
gotta take a
metaphor?
breath.
What's the metaphor? You eat an elephant one bite at a time, not the whole thing. So yeah.
Yes. Yeah. But knowing where you're going is so important, because if you don't, you end up just spending a lot of money.
Oh, you can just all over because there's so many options out there. There's so many, like we talked about, there's so many, I guess, startups, so many fintechs out there to really, you know, it's kind of like the shiny red ball syndrome. You get so like, oh, wow, check that. Oh, look at that over there. So yeah, you got to be, I think if you know your why and you have these set goals, then you're in good shape in here.
Well, there's a good line from John Mellencamp's song years ago. It says, you got to stand for something or you'll fall for anything.
That's right. That is very appropriate for the times that we're in right now.
Yes.
Very appropriate. Hey, there was something else that I saw online as well. I'm such a news junkie, and you're kind of like this renaissance man for fintech and stuff like that. So I really enjoy talking to you, Paul. Let me find it real quick on my side. Oh, it's Amazon One. It's saying it lets you pay in store. You go to their store. You've heard the Amazon the Amazon store. You can just grab a sandwich and just walk right out. Well, now they have this payment process where you use your palm and you just kind of set your palm on this thing, and then you're in 1 second, then you're out. So I'm thinking, oh my God, and this is happening right now. Now it's come to fruition. It's true now. So what does this mean for credit? Because I'm thinking about credit unions being top of wallet or top of phone, as we're doing right now. So what does something like this mean, this kind of payment transformation mean for credit unions and the industry right now? Because it sounds like this is moving at warp speed now that's really here.
If that's bypassing the credit union, right, that payment, that's not good. Right now, I mean, you've got with Amazon, you embed your credit card and the payment can be routed through your credit or debit card, which means that the fees are picked up, the interchange fees, which is a decent amount of income for any credit union. Yeah. Right. If Amazon, which is Apple was they're trying to bypass that process, you know, using a different set of payment rails. That's not good. And then yet again, you know, it's kind of like John Best used to say, death by 1,000 cuts, right? That's just another area that I think is very concerning, you know, so your payments revenue goes down. Your margins, your volume is down in your auto loans, your margins are down, your margins are down on your mortgage products. You know, that's death by 1,000 cuts. And so that's getting back to, again, there's another reason why you do this. And, you know, when I was in business school, there was a guy named Michael Porter. He was a Harvard professor, and he had this model called the 5 forces model. Yeah. And so basically you put your industry in the middle, and then there's these five forces around, right? Threat of customers, threat of suppliers for integration. But there's always this one of these big existential threats, right? And I think that's an exercise that the credit union should go through. Like, what's happening with our customers? What's happening with our suppliers? What's happening in the world? And how are these things affecting our industry?
Mm-hmm.
You know, you could kind of go around and use that five forces model, and that's okay. What does that mean for us, and how do we reinvent ourselves to do this, right? But what you gave me there is just another data point of why this reinvention is so important, this whole rethinking. And it comes down to the leadership team at the credit union has to just got to get together and say, guys, we got to take this thing seriously. Like, we've kind of gone through everybody working at home and got through that, but we have a bigger problem here. Where's this ship headed? Right?
Correct.
And that's how, and then you pull in all those data points. We got Amazon doing this. We've got, we got the car loans are down, et cetera. Go through and process that and kind of figure out what that map looks like. And there's another great example for a few credit unions to get together and do it as a group, right? Collective, right? That's a good NCUSO sponsored, topic is, all right, guys, we got to figure out what does credit union 2.0 look like? Right. Like Kirk's got CU 2.0. Well, describe that. What does it do? How does it look?
What does it look like?
How many employees does it have? How many hours is it open? How do you access it? That's somebody needs to put some flesh around what that CU 2.0 is.
Because that leads me to my next story, which was also on the financial brand, and it was Gen Z. Gen Z says they're eager to use big techs for banking. So, but will they use it? That's that's what we don't know yet. But the possibility is there, and Amazon obviously is poised for that quite nicely. Apple as well. Google, the big tech. They can easily do something like this. So I really subscribe to your thoughts that credit unions really need to reinvent themselves. They need to be Madonna here to really move forward.
Well, and one word that to remember is disintermediation. So Gen Z doesn't have a relationship with a bank. The banks, the financial institutions have been disintermediated by Apple, by Amazon. They put themselves in front, where our generation, we all had relationships with financial institutions. We grew up with that, right?
Yep.
So that's a real danger to the entire retail financial industry, is that disintermediation is happening. And how do you get around that? How do you, because Amazon to me is not a great place. I don't want Amazon knowing how much money I have. Right. And that's the kind of education that has to happen. That's how you position yourselves around that, where Gen Zs don't think about that today. They think, well, it's just convenient, right?
Exactly.
This is the process of you've got to go through, okay, how do we change that mindset? How do we alter that mindset? Maybe there's some ways of advertising or some things you do that kind of get that, because Amazon is not altruistic. I'll tell you that, right?
Got that right.
Oh, they're a money-making machine. So is Google. So is Apple, right?
Yeah.
So yeah.
Oh, good stuff. Good stuff, Paul. Oh my gosh. Is there anything else bouncing around in your brain that you want to talk about here? Because we still have about, we have about 7 minutes left. So anything else you want to shed some light on? Because we've covered a lot here.
You did. I think you actually talked me out, Mike.
What?
You pulled it all out of me. I think I'm officially exhausted.
Time for a nap. Time for lunch. Oh my gosh. Well, Paul, thank you so much for taking time out of you. I know you're super busy and you got things going on in many, many different areas, and the ideas and the thoughts that we talked about here are I don't know, they're gold standard. They're just really cool stuff that I think that should be done. Especially, I'm still stuck on the venture capital QSO. I'm just so into that right now. I just think it's such a great thing for the industry.
I will say, I love the credit union industry. I don't know what it is about it that I really want to be part of it being successful somehow, some way. And so that's important to me. I just, it's kind of I can't quite describe it to people. Some people I talk to don't even know what a credit union is. And, but I just met some of the best people ever through my time there. And I just feel like, man, it's got such great potential. I've always believed that. It's an industry of great potential and great people. how do we turn that into something?
How do we make
really
it better? Yeah,
Yeah.
exactly. And now's the time to do it. Now's the time to do it for sure. Reinvent yourself big time.
Yeah.
All right, Paul. Well, thanks again. Appreciate the time. Don't be a stranger. Keep in touch. And
Absolutely,
yeah, let's keep this momentum rolling here for you. All right.
All right. You
Good
bet.
stuff.
Thanks, Mike.
All right, Paul. Thanks again. Be well.
Okay.
All right. Be well. Be safe.
I will. Thank you. Bye.
All right. Thanks again. Thanks again, everybody, for watching. And thanks again to Paul for gosh, I mean, there's so many topics that this guy can talk about. It's just, again, I think he's kind of this renaissance man for fintech. So appreciate him coming on and talking to us about a myriad of topics. And next week, John will be back for kind of the regular show that we usually do. So looking forward to that. And again, thanks again for attending. And we will see you guys next Wednesday, 12 noon my time, Pacific time, but I think 3 o'clock Eastern, 2 Central, 1 Mountain, all those time zones, but you guys know about it. So again, thanks again. Appreciate it. Always appreciate your enthusiasm and passion for what's going on right now. So see you in 7 days. Bye.